All right, so we're digging into Nike's Q1 numbers for 2025, their latest earnings report. And you sent over a whole stack of info, so it's time to figure out what's really going on with Nike.
Yeah.
On the surface, revenue's down, but there's also all this talk about a big strategy shift. Should we be worried?
Well, what I find really interesting about this is that Nike's kind of playing 3D chess here, while everyone else is still trying to figure out checkers.
Okay.
You take a quick glance at the report, you might think, yikes, revenue's down 10%. But that's before you even factor in all the decisions that they're deliberately making right now.
Okay, so let's unpack that a little bit. They're intentionally selling LES of their classic shoes. We're talking, Air Force Ones, Jordans, Dunks, the stuff that, like, practically flies off the shelves on its own. It seems kind of counterintuitive when you say that revenue is down, right?
It does, and this is where, understanding what gross margin is becomes really important.
Okay.
Think of it like it's the profit they make on each sale.
Gotcha.
And that margin, right, is up by 120 basis points, which means that for every shoe they actually do sell, they're making more money.
So they're prioritizing profit over just sheer volume, even if it means, taking a bit of a hit in the short term.
Yeah.
But how is that actually playing out, like, in the real world?
Yeah.
Are we talking empty shelves, or are people just not, jumping on the limited releases the way they used to?
Well, I mean, if you look at their online store, that's a prime example, right? Almost 50% drop in revenue from those iconic shoes. It's clear that they're trying to move away from, the discounts and just the hype and really focus on those full price sales to customers that, genuinely want the product.
Which is a bold move when you think about how much those shoes have driven their business for so long.
Yeah.
And it's not just footwear, right?
Yeah.
This seems like a shift that's happening across a bunch of their product lines.
Yeah, exactly. Men's and women's lifestyle, even the Jordan brand is intentionally down this quarter. It's like they hit the reset button, and I think, what's interesting is that it sends these ripples throughout the entire industry. Imagine you're a smaller brand watching this thinking, well, if Nike's doing this, what do we do?
It's like they're saying, we're Nike, we make the rules.
Right.
But a big move like this, it's got to come with, a few bumps in the road.
Sure.
Earnings per share took a hit, down 26%. That's got to have some investors a little bit concerned now.
Oh, it's definitely attention grabbing. But I think what's important to remember is that tax benefit they had last year, those foreign tax regulations got delayed. So this year's numbers look worse in comparison, but it's not really, an accurate reflection of the whole picture.
Ah, the old accounting shuffle. So we've got this revenue dip that's not as bad as it seems, a deliberate shift away from the hype-driven sales.
Right.
And then on top of that, a new CEO's coming in, Elliott Hill, a Nike veteran. What's the read on that, especially since they decided to pull guidance and delay their investor day?
It's a little unusual, but I think it could signal a couple of things. Maybe they're giving Hill space to kind of assess the situation, come up with his own plan before they, put everything out in public.
Right.
Or it could just be about controlling the narrative a little bit, No big promises until they're really confident in what this new direction is going to be.
Either way, it's a power move.
Yeah.
Hold your cards close to your chest while you're making these big changes. But let's not forget, we're just looking at one quarter here.
Exactly. This is a marathon.
This is a marathon, not a sprint.
Exactly. And like any good marathon, there are going to be moments where they need to pace themselves, conserve energy, maybe even switch up their strategy mid-race. This first quarter feels a lot like that, like a calculated risk with potential for a really big payoff down the line.
And speaking of which, it's not all doom and gloom in this report. There are some areas where Nike is absolutely crushing it. Why don't we take a look at some of those bright spots? Okay, so we've got Nike pumping the brakes on some of their biggest moneymakers, but this isn't like a distress sale, right? This feels more like calculated, trimming back the weeds to make way for new growth. Where are they seeing that growth in this report?
Well, if you're looking for a company that's, happy to just play it safe and stick with what they know, Nike is not it. They're making big moves, taking risks. And honestly, I kind of like to see that, even if it leads to some bumps in the road.
Yeah.
But to answer your question, men's fitness is a great example. They saw a huge jump in sales this quarter. And we're not just talking about the U.S. This is global. And same story with their running shoes, both men's and women's. Remember when running was kind of a sore spot for them?
Yeah, they were struggling.
It looks like they might be turning that ship around.
So doubling down on performance, reminding everyone that they're not just about, the hypebeast sneakers.
Exactly.
But are there any specific product lines that stand out in the report?
Oh, yeah, for sure. I mean, look at the Mercurial football boot. double-digit growth this quarter, which tells me it's not just about brand recognition anymore. They're actually making products that athletes want.
Yeah.
And while we're on the topic of athletes, the GT Series basketball shoes,
Yeah. What about those?
also crushing it.
Which makes sense.
Yeah.
Nike's always been about, aligning themselves with the best of the best.
Always.
But let's dig a little deeper into this running comeback because,
Mhm.
I mean, they were up against some tough competition, right?
For sure.
All these new running shoe brands popping up left and right. What changed?
It's almost like they took all those challenges personally. Like someone said, you can't win with running anymore. Nike was like, hold my beer.
Challenge accepted.
They went all in on running new marketing campaigns, sponsoring races, grassroots events, you name it, and it's working. Specialty running stores, those are the tastemakers, right?
Yeah, they know their stuff.
Well, their orders for Nike running shoes are up by double digits in North America.
Wow, that's huge. It's like they're winning back the cool kids in the running club.
Exactly.
But it's not all about going back to their roots, right?
Right.
Nike's also known for pushing boundaries, constantly innovating. So what does their future look like?
Okay, so buckle up because this is where it gets really interesting. Remember how we talked about new footwear driving a significant chunk of their revenue this quarter?
Yeah, like new designs, new
Yeah.
tech, that kind of thing.
Exactly. That's not an accident. They're always experimenting, and it seems like some of those experiments are paying off big time.
Like what? Give me an example.
Okay, so there's Sabrina line, named after basketball star Sabrina Ionescu. You know it.
Yeah.
That line has seen explosive growth this quarter, like 5 times what it was doing last year.
5 times growth. What were they thinking?
I don't know, but whatever it is, it's working. And then there's this whole other trend they're tapping into, the look of running.
The look.
Yeah, shoes that are kind of inspired by performance running but designed for everyday wear, like the Vomero 5, for example. It's up over 4 times compared to last year.
Okay, now that I get. It's like the athleisure of footwear,
Yep.
comfort meets style, smart move. But are these just flashes in the pan? Or is Nike really building something sustainable here? Can they keep this momentum going?
Well, that's the million-dollar question, isn't it?
Is.
But their projections for spring 2025 look promising. They're expecting new footwear sales to be up by double digits again.
Yeah.
So they're definitely betting big on these new lines to drive growth and kind of offset those intentional declines we talked about earlier.
Makes sense. But there's one market they can't ignore if they want to truly succeed, and that's
China.
China. Exactly.
The dragon in the room.
China, right. The land of opportunity, but also,
Complications.
yeah, complications, exactly.
It's always interesting, isn't it? Like a whole other planet for business.
Totally
With
different.
its own, rules and rhythms.
Yeah. And it's been a tough market lately, like you said, with retail slowing down.
For sure.
But Nike's actually doing better than expected there.
Yeah, they are. It's not all sunshine and rainbows, but it's not a disaster either.
Okay, so less of a headache, more of a tension knot in the shoulder.
Maybe.
Give me some numbers. How much are they down, and how does that compare to their competitors?
So their revenue from China is down about 3%,
Okay.
which, again, not great, but considering how other brands are doing, it's not terrible. And here's the interesting thing. Their wholesale business in China actually grew.
Really?
Yeah, by 10%.
Wow. So people still want the Nike swoosh, even if they're not always buying direct.
Exactly. Which makes you wonder what's going on with their direct-to-consumer channels.
Yeah. Why the struggle there? Is it online? Is it brand perception? What's the deal?
That's the million-yuan question. It seems like Nike Direct, especially their digital presence, took a hit this quarter. Could be a few things, maybe some competition from local brands, some economic uncertainty among consumers, who knows.
Yep.
But I gotta give them credit. They're not just sitting back and letting it happen. They've had some big wins with Chinese athletes. Their marketing is still on point, and they're adapting to the market all the time.
It's like they're learning to dance with a dragon, which is pretty much the perfect metaphor for doing business in China.
Very much.
But speaking of interesting moves, remember a while back when Bill Ackman decided to buy a mountain of Nike stock?
Oh, yeah, that was a power move for sure.
And he didn't exactly go bargain hunting either. He bought in when it was at $75 a share, and now it's around 82.
Not bad for a few months' work.
Not bad at all. Makes you wonder, does he see something everyone else missed? Is this like a vote of confidence in their new direction? Or is it just Bill Ackman being Bill Ackman?
Probably a bit of both. But here's the thing about Ackman. He doesn't make impulsive decisions. He's all about the fundamentals. So he's looking at the big picture, Nike's brand, their innovation, their global reach, and clearly something's clicking for him.
Okay, so let's try to tie all this together.
Hmm.
We've got a company that's shrinking some parts of its business to fuel growth in others.
Right.
A China strategy that's a little up and down but still has potential.
Definitely.
And a billionaire investor who's basically saying, I'm all in on Nike.
Hmm.
So what's the takeaway here? Should we be bullish, bearish, or just completely bewildered?
You know what? I'm going to say I'm energized.
Really?
Yeah, this isn't some company that's content to just sit back and relax. They're making moves, taking risks, and that's exciting to see, even if it comes with a few hiccups along the way. They're not just reacting to the market, they're trying to reshape it.
And that's the Nike we know and sometimes love to debate, right? Always pushing the boundaries, always one step ahead.
Always.
So for everyone listening, here's your food for thought. Nike is making a big bet on innovation, on moving away from hype and toward genuine product and connection.
It's a gamble for sure.
Will it pay off? I guess we'll have to wait and see.
Mhm.
But one thing's for sure, this is a story we'll be keeping an eye on.